What if I told you the perfect stock might be hiding in plain sight? It might be something that you use daily. Yeah. So hello everyone, I am Tamandeep and today we are going to discuss Mr. Peter Lynch's secret to the perfect stock. So here we go. The perfect stock. The first part to the perfect stock is the beauty of boring. See, the more people are excited about a stock, the more overpriced it tends to be. So the first part of boring is the name is dull. If the name is dull or even ridiculous, it usually tends to be a really good stock. Yeah. See, it wards off those suit and tie people, right? Who like to talk about only the sexy stocks on the cocktail parties. But we like to make money. Let it be dull. We want money, right? Example would be Pidilite. What is Pidilite? It is a leading adhesive manufacturer in India. Okay. It's a ridiculous name and it does something boring. It actually tick marks multiple things, right? It also tick marks one of the thing that I said before in one of my previous videos. Before going to that, the main product of Pidilite is Fevicol. Yeah. Those who don't know, Fevicol is the glue used in India. I was born in 2000 and throughout my childhood, whenever I wanted a glue, it was Fevicol that I used. Yeah. So, as I said, it tick marks one of the previous checks also that I talked in a previous video. And the check is, it is something that you understand. It is something that you use regularly. Okay. So, Pidilite. Moving on to the next, if it does something dull or disagreeable. What can be dull, right? How about waste management? Waste management is pretty dull, right? Who invests in a waste management company? But should we though? Let's see. See the waste management in court. It's a Texas-based waste management company. Look at it. 86% in last 5 years. 86%. Eh? This is about what 13% a year, roughly. Yeah. So how beautiful a stock it is. Moving on to the next check mark. If it's a spin-off. See, when a parent company, when a big parent company spins off a smaller branch or a smaller company, investors are not usually interested in it at first, which creates a great opportunity for individual investors to make money. Yeah, you buy the stocks, then the big investors get in and you make money. That's how it goes. So the example would be one of the restaurants brand international, right? It is the parent company of Burger King. When it spinned off Popeye's Louisiana Kitchen, no one was interested in it. But we all know what a big name it is, right? So that's the kind of opportunity you should be looking for. Moving on to the next segment. The competitive edge. If a company is competitive, it's good, right? No institution owns it. Think of it. If it's a good company and no financial institution owns it, it means it has a major scope of growth in the future. Let's say example can be HDFC Bank. Remember early 2000s? No one was interested in HDFC. They just thought it's another private lender in a public sector dominated area, right? Public dominated sector. What can it do? But let's see. Those who actually bought stock in early 2000s, they are millionaires now. Look at it. 36,000% increase. It's beautiful. Buy the stock before big investors buy it. Yeah. A no growth industry. It does not really make sense, right? Why a no growth industry? Why not fast growth industry? That growth industry is fast growing, companies will fast grow and will make money. Why no growth? See, the fast growth industries attract a stampede of investors, and we all know what happens when most of the people are already investing in the stock. Yeah, it's already overpriced. So a no growth industry. What can be an example of no growth industry? How about funeral service? Look here. Service Corporation International. It's a Texas-based company which has funeral houses, right? cemeteries and such stuff. It's a grim business. But look at the stock. 86.5%. How beautiful. This is also what, 13%, right? 13% per annum. Isn't that good? And it's a stable market. It's no growth, but it's still stable. You see that? So it's good. But now it's got a niche. See, every good company has its own niche, right? Something specific that they are good at. Always look for that. Example can be Page Industries, right? Now this Page Industries does not manufacture pages. Look here. It has exclusive license of Jockey for many countries. So it's basically Jockey stock, right? It's affiliated with it. And look how beautiful it is. And who competes with Jockey in innerwear, right? Hardly anyone. There are just small players everywhere, but no major player against Jockey. And it got a niche. And see the profit here. Okay, now moving on to my favorite part, financial and operations. It's the best. So, people have to keep buying it. See, Peter Lynch is fond of consumable products like Fevicol that we talked about, right? Pidilite shares. So when people keep buying it, stock price keep increasing, right? So that's good. Look for consumable products that people keep buying. When company uses technology, don't invest in fancy technology companies. You invest in companies which uses those technologies to drive their profit, right? Example can be D-Mart, Walmart, right? Such companies use that scanner for their products, and such companies also use technology to streamline their supply chain. Yeah, let's look at D-Mart share. Look at it, right? Just in a few years, about 600% growth. It's so good, isn't it? So that's the kind of company you want to invest in, right? Company that uses technology. Technology will get cheaper, their profit will get high with reduced cost. Remember that. So, insiders buying. See, there are many reasons why insiders will sell the stocks. Insiders as in CEOs, managers, CTOs. They sell stocks maybe to buy a house. But there is only one reason when they start buying their stock back. When they believe that the company's share is gonna increase. So when they are buying their stocks, it's a good news for us. We will also buy that. Yeah. And similarly, when company is buying back its own stocks. When management of a company believes that investing in their own stocks is quite profitable, they use their excess profit to buy back their own shares. To buy back their own shares. So that is perfect opportunity to buy their stocks, right? Because not only is it expected the stock price would go up, but also with less number of shares, the profit per share increases. So that's also good, right? So there you have it, guys. The perfect secret to the perfect stock. So the takeaway is, go for a boring, unloved, unhyped company with stable finances and with a niche. That's how you make profit. So that's it for today, guys. Bye. Stay tuned.